Hey guys, what's going on? Aaron here, and in this video I just want to touch on some Celsius updates, some questions people had. Also going to touch on some topics of the disclosure statement. I read pretty much everybody's comments on my YouTube station. I've been scouring Twitter, and I just want to give you guys like an update on everything that's happened since my last video. So before I dive into the disclosure statement updates and everything about the plan, the wind down, liquidations, I first just want to touch on some of the motions that came in through the docket. This here is the order to extend the debtor's exclusivity period. This was obviously going to happen because the judge wants to see if this plan can go through. So this next order is the conversion of altcoins to Bitcoin and Ethereum. Now, I just want to read this for you guys. They say that they may sell or convert any non-Bitcoin and non-ETH crypto to Bitcoin or Ethereum. So we don't know if it's going to be 50-50 or what. And this will begin on or after today, July 1st, 2023. And this has to do with the SEC ruling and making sure that when they distribute crypto to us, it is done in a way that the SEC allows. Now, I believe they are going to be converting USDC and stablecoins to Bitcoin and ETH as well. They are also using our USDC, they're using our stablecoins to fund their business anyway. That happened, I think, last year at this point. The judge said that since it's technically the estate's money, that they can use stablecoins to fund and keep Celsius going. So hopefully we can get into this new company or liquidate, which I'll cover later in this video. And then we have the law firm representing the UCC. They billed the estate $3.6 million in just the month of May. So all of these expenses, and we even got one from Akin Gump, they charged $735,000 for April. We really want to get out of Chapter 11. So the longer that we wait, the more fees lawyers are going to get. So let me talk a little bit more about the disclosure statement. I want to talk about taxes. I want to talk about this orderly wind down, what that means, and just some updates also from Simon Dixon as well. First, I want to touch on this tweet from Al Mike Mac on Twitter. He thinks that this NewCo with Fahrenheit, especially partnering with US Bitcoin Group, can really be effective. And he is a little bit more optimistic about this Fahrenheit plan and getting equity in the mining company. Ultimately, though, I think we still need more information about this, which I'll get to later in the video. So what Simon Dixon is doing on Twitter is he's trying to do a side-by-side analysis of the Fahrenheit reorg plan and the controlled liquidation backup plan. So he really wants to see which one would be better. So this is obviously in the works. He is working on this. I am doing my research. A lot of people in the community are as well. So that's why this is an ongoing thing, and it's important that you subscribe so you do not miss these updates if you want to be involved in this process. I get it if you don't. If you just want to say, you know what, peace out, maybe I'll come back when I get an email saying I can vote. I completely get it. But if you want to be more actively involved and know what's going on, I suggest subscribing. Simon also said, am I the only one concerned that nobody from Fahrenheit has made any effort to engage Celsius creditors since the disclosure statement was published? And then Michael Arrington of Fahrenheit said, on the Celsius process, we will engage with the community promptly for the earn and borrow mediation and the omnibus hearing on July 18th. And then Simon says he just had a call with Michael Arrington. So we will be getting more information about this stuff, and I will cover the disclosure statement in just a moment, so hang tight. I first want to cover this whole idea that Marathon and a lot of these mining companies did a lot better than Bitcoin in the bull market. So this orange line right here, this is Marathon. If you don't know what Marathon is, they are a digital asset company which engages in mining crypto. So they're a mining company. And we have Marathon on the top here, right here where my mouse is. You can see it's a lot higher than where Bitcoin is, which is way down here in this little baby blue. So it did a lot better than Bitcoin when comparing the percentage gains in the bull market. This is the middle of 2021. This chart shows the same thing. We see Marathon on the top here, and then on the very bottom in the blue here is Bitcoin. So that is the benefit. I mean, that's kind of what we're trying to figure out if it'll happen or what the likelihood of that happening will be with Fahrenheit. Fahrenheit has a really good team. They're partnering with very competent miners. We just want to make sure that the incentives are aligned and that us giving them $500 million of crypto is going to be better than us just getting that crypto back and liquidating everything. That's what we're trying to figure out. That's what Simon Dixon is trying to figure out, kind of comparing the wind down with the Fahrenheit plan. But taking a look at the disclosure statement, I believe, and what other people believe, is that if this plan gets denied, which it probably won't, because they just need one class of creditors to approve this plan. Essentially what that means is that everybody in the convenience class, so the people that they're going to give 70% back to, if they can get that class to approve the plan, that's called a cram-down, and then the plan will be approved. So that is the game that they're playing. We've known about cram-downs for like 9 months now. I've been talking about cram-downs on the station. Simon was talking about it last summer. So we know that's how they are going to get this plan approved, is because the convenience class is like, well, I'm going to get 70% back of my crypto. Granted, it's only people that have $5,000 or less, but they're going to be like, screw this. I'm going to vote yes for this plan to get 70% back. But anyway, I'll touch on that a little bit later. Essentially, this recovery under the plan. So we have general earn claims. The NewCo saying they're going to give 69%. Obviously, that's like half 50-50 equity or so. The liquidation analysis, just 45%. A lot of people are like, I don't want any equity. I just want this to be liquidated and get as much crypto back as possible. But I want to talk more about this orderly wind down because I was actually confused about what this meant too. So we don't actually get to decide whether we want Fahrenheit or the orderly wind down. They are the same plan. So again, if the convenience class all votes yes, because most likely they are, and then there will be a toggle option of going from the Fahrenheit plan to the orderly wind down. So basically, if the orderly wind down makes the most sense due to complications or delays, then it can just toggle to that from the Fahrenheit plan. Now, what is an orderly wind down? Well, it would provide for the liquidation of the majority of the debtor's assets, that means everything Celsius owns, and development of the backup mining transaction, as opposed to restructuring of the debtors through the NewCo transaction. So there would be way less restructuring, right? There wouldn't be this entire new company. It would just be a liquidation. Here they say both the NewCo transaction, so that would be with Fahrenheit, and the orderly wind down are a part of the plan. That is super important and one I missed in my last video. In other words, if you vote to accept the plan, you are voting to authorize the debtors both to pursue the NewCo transaction, so that would be them going ahead with this Fahrenheit plan, and to pivot to the orderly wind down if the debtors, the committee, meaning the UCC, and other advisors basically say that, hey, we think it's a better idea to go with this orderly wind down, especially like if the SEC says, you know what, we just need to wind down this company, they can toggle to that. So the orderly wind down will do this. The debtors will seek to distribute liquid crypto, which is pretty cool. The debtors' illiquid assets will be liquidated and proceeds will be returned to the creditors. Sounds good to me there. The debtors will pursue the backup mining transaction, a pure play, publicly traded mining business, in which creditors will receive 100% of the equity. So even with the wind down, creditors will still get equity in a mining company, right? I don't know how profitable that'll be if they're not taking the proceeds of the Ethereum staking and basically reinvesting it into the mining, but we'll still get equity in something. But honestly, I don't really know how good that will be. And next, the debtors estimate that the orderly wind down could take approximately 5 years to complete. Now, people were freaked out about this whole 5-year thing. I mean, ultimately, they can liquidate the liquid crypto immediately or pretty darn quickly, right? They don't have to take 5 years to get the liquid crypto. I think this whole 5-year thing is basically how long it will take to liquidate the illiquid assets possibly, and also to get this backup mining up. I really don't know, but this 5-year thing kind of feels like a way to scare people. And also, essentially, Celsius and Fahrenheit created this disclosure statement, so they are encouraging the SEC and other people to not liquidate. They want their Fahrenheit plan to go through. The debtors may select a different backup plan sponsor if a different party provides terms superior to those offered by BRIC. So this is where it can get a little bit confusing. Apparently there is a second backup plan sponsor that we don't even know about. That's what we've been hearing. So basically, if Fahrenheit doesn't go through, this does not mean that we don't approve the plan. It means the plan is approved, but they decide to toggle to liquidate, right? If that happens, there may be like another auction. There may be like another company that says we can do it cheaper than this BRIC conglomerate, which is charging a lot of money in fees. So basically, this is up to the debtors, meaning Celsius, the UCC, the committee, and their respective advisors. I also think that the SEC has a say in here whether or not this goes to the liquidation. So that's super important, and one that is honestly still kind of confusing how this is going to play out. It's not like we get to vote in favor of the Fahrenheit plan or the orderly liquidation. We're voting in favor of both, and then the UCC, the committee, the debtors, probably the SEC can decide, you know what, we don't want the Fahrenheit plan, too much regulatory uncertainty, we're just not going to approve it, and then they toggle to the liquidation. That's what's basically going to happen. Now, there's a possibility the SEC could come in here and be like, we don't want any of this crap, we just want to liquidate everything to cash or everything to Bitcoin and Ethereum and just give everything back to creditors, nothing else. That could happen too. That would look like something like a Chapter 7 liquidation, which it looks like they're projecting around like a 45% recovery, which, to be honest, at this point, I think most people would take, especially if this just ends this Chapter 11 process. Because taking a look at how much we're paying these professionals, it's a lot of money, and the longer this goes on, the more money we're giving away to lawyers, and nobody wants that. So now I want to finish the video talking about the federal income tax consequences. So basically, it's very confusing, and it has to do with the value of what the holders receive in exchange for their claims. But ultimately, what I want to talk about is right here. There is generally no direct guidance under the tax law on how to treat a customer's transfer of crypto to a business like that of the debtors. So there's no guidance. Okay, that's not cool. Accordingly, there is significant uncertainty with respect to the tax consequences of the restructuring transaction. So they're basically saying, okay, if Fahrenheit goes through, there is significant uncertainty. Cool. Well, that's not really helpful either. It's possible that the IRS or a court could disagree with what the debtors are doing. Okay? The debtors, meaning Celsius, together with their advisors, continue to study this issue. So this is so new, we don't even know what the tax consequences are going to be. The debtors continue to evaluate how dollarization of certain claims may modify the above analysis. So long story short, they have no idea how this is going to affect us for taxes. They have no idea. My guess is that if you bought Bitcoin really cheap, you probably are going to get some tax consequences from this, especially if they sell your Bitcoin at a higher price. But then there's that confusing argument of, wait, they said that this was the estate's money. This isn't even our Bitcoin. So how do the taxes work when it's like the estate's crypto and it doesn't belong to us? Honestly, this is way above my pay grade, and even just reading this, I was like, what? And ultimately, they're like, we don't even know what the tax consequences are. So I really can't give you any suggestions or ideas with that. Basically, when a plan gets confirmed, we'll get all the information in some document about what our claim was in USD value, how many coins we had, and then how much US dollar we got back. We'll then have to take that to some accountant, and then hopefully they know what they're doing, but they're probably going to be like, I have no idea. So basically, that's it for taxes. So guys, that is it for the video. Just wanted to make this short and sweet to give you guys just like an update on everything that I'm seeing. Ultimately, there's nothing to do right now. We're just waiting for the time to vote. Before we vote, though, it'll have to be approved by the judge and the SEC, so we still have a while to go from there. Most likely, this plan will get approved because there is that whole cram-down method, basically enticing or bribing the convenience class to vote yes. And if they vote yes, then the entire plan will be approved. So we'll know more in the coming weeks and months. Make sure to subscribe if you want to kind of stay active on this. I'm doing my best to make videos and just kind of help you guys stay afloat. So till next time, guys, talk with you soon, and bye for now.